The title of the video is Audit Intangible Assets Chapter 2, On-the-Job Training Task Analysis. Task 1. Prepare for an audit of intangible assets. Lead schedule preparation. Develop a lead schedule based on the current year's trial balance and the prior year's audited trial balance. Review of accounting policies. Assess any changes in the following accounting policies or estimates. A. Whether assets are carried at cost or revaluation. B. Amortization method. C. Useful life of the assets. D. Residual value. E. Capitalization policy. Movement schedule. Obtain movement schedules for intangible assets, detailing changes such as additions, disposals, write-offs, transfers, amortization, impairment, and other adjustments for the current year. Ensure these are reconciled with the lead schedule. Verify the casting, cross-casting, and recalculation of the schedules. Check that total amortization and impairment losses for the current year agree with the trial balance and profit and loss statement. Obtain a schedule of gains or losses from disposals and assets written off, and confirm these amounts in the trial balance or profit and loss statement. Reconcile the cost, amortization, and impairment of the disposed or written off assets with the asset register. Investigate any reasons for transfers between asset categories. Analytical procedures. Conduct analytical comparisons between the current and prior year balances for total intangible assets and individual asset categories. Understand the reasons for any fluctuations. Review of materiality. Examine items above the materiality threshold or those that are otherwise unusual. Confirmation summary. Prepare a summary showing the name of the counterparty, the nature of the intangible asset, and other key details. Internal controls. Review the intended reliance on internal controls and assess if this remains appropriate based on findings. Intangible assets. Defined. Intangible assets are identifiable non-monetary assets without physical substance. According to FRS 38, they are resources controlled by an entity due to past events expected to bring future economic benefits. Refer to paragraphs 12 and 13 to 16 of FRS 38 for guidance on identifiability and control of intangible assets. Common examples include brand names, publishing titles, software, licenses and franchises, patents, copyrights, and other industrial rights. Designs, models, and prototypes. Intangible assets under development, customer and supplier contracts, and websites. Trial balance reconciliation. Confirm that all accounts mapped to intangible assets are included in both current and prior year's lead schedules. Reconcile the prior year's balances with the audited financial statements unless restated due to new accounting standards. If a subsidiary ledger is in use, ensure it agrees with the general ledger and review any adjusting journal entries with supporting documentation. Management estimates. Assess how management developed estimates like useful life and residual values. Consider performing a retrospective review or benchmarking against similar companies to ensure these estimates are reasonable. Perform further assessment if estimates seem unreasonable. Development in progress. Verify that asset transfers out of development in progress reconcile with transfers into other asset categories upon reclassification. Ensure amortization, impairment losses, gains or losses on disposal, and proceeds are reflected in both the cash flow statement and tax schedules. For assets acquired from a related party at the seller's carrying amount, confirm that only the new purchase cost is recorded, not the gross cost and accumulated amortization. Analytical review. Review the analytical procedures conducted during planning. Identify any risks that could cause material misstatements in intangible asset balances, and discuss material or unusual variances with the client. Document the review clearly to provide an understanding of account changes. Significant or unusual account balances. If any significant or unusual account balances emerge during the audit, discuss with the audit team leader to adjust the audit approach if necessary. Intangible asset. Circularization. Intangible assets such as customer and supplier contracts may be selected for confirmation. Use sampling template to calculate the required sample size for this and other audit procedures. Internal control. Exceptions. If exceptions are noted, indicating internal controls are not effective or implemented as planned, discuss with the team leader to adjust the audit strategy. Task standards. Reconcile the general ledger total for the current year with the trial balance and intangible assets listing, and verify that prior year balances match the audited financial statements. Document and evaluate management's estimates. Ensure movements in intangible assets are correctly cast and agree with the balance sheet. Recompute amortization and agree the figures with the profit and loss statement. Document the analytical review thoroughly. Ensure the accounting policies used comply with applicable financial reporting standards. Struggling with the complexity of auditing intangible assets? Whether it's patents, trademarks, or software, preparing for an audit in this area requires precision and expert knowledge. This task can be daunting, but it doesn't have to be. If you're ready to sharpen your audit skills, subscribe to the channel and hit that notification bell so you don't miss any of our detailed training modules. And don't forget, our on-the-job training guide for auditing intangible assets is available now. Head to the link https://payhip.com/b/rjvma and get instant access. What you see in the video is exactly what you'll receive in the PDF digital product.